Hello folks, welcome back to NeoSource. A lot of stuff happened last week regarding China and its company delisting fears, and it was seen very much on the stock market. This is the first time I am going to talk about news related to the stock market, which I usually am not doing, because I am no financial advisor nor have I any financial degree or experience. Keep in mind the stock market is a highly complex matter that is very difficult to predict. But anyways, let's talk about what happened during last week. Bloomberg's wrong information according to the CSRC. Bloomberg published an article on December 1st that said that China is planning to ban companies from going public in foreign stock markets by closing a loophole long used by the Chinese technology industry to raise capital from overseas. The article stated the following: the ban, intended in part to address concerns over data security, is among changes included in a new draft of China's overseas listing rules that may be finalized as soon as this month, said the people, asking not to be identified discussing private information. Companies using the so-called VIE structure would still be allowed to pursue initial public offerings in Hong Kong, subject to regulatory approval, the people said. Companies currently listed in the US and Hong Kong that use VIEs would need to make adjustments so their ownership structures are more transparent in regulatory reviews, especially in sectors off limits for foreign investment, the people said. It's unclear if that would mean a revamp of shareholders or, more drastically, a delisting of the most sensitive firms' moves that could revive fears of a decoupling between China and the US in areas like technology. Details of the proposed rules are still being discussed and could change. This article has been published at 8:32 and has been updated at 13:06 with. The China Securities Regulatory Commission said on its website Wednesday that a media report about banning the overseas listings of companies using the VIE structure is not true, without giving further details. So the China Securities Regulatory Commission denied the information given in the article, with the source indicated as people familiar with the matter. The article still raised the fears about Chinese companies to be delisted in foreign stock exchanges like NYSE. Didi delisting. Didi will officially delist from the New York Stock Exchange, the firm wrote on December 3rd on a verified Weibo account. The delisting is not happening because of any US regulators driving it. No, it's because the Chinese government wants it. China already warned the company not to list at New York back then, but Didi did it anyways, besides the accusations of breaking privacy laws and posing cybersecurity risks. Covid-19 Omicron variant. The fact that there is a new, even more infectious Covid-19 variant is certainly not helping the stock markets overall. Investors are afraid that this might have negative effects on the global economy, like it had at the start of the pandemic. So one reason why the stock market is tanking overall is the new Omicron variant spotted in South Africa. US SEC delisting threat. I will summarize this very briefly because otherwise it's impossible to keep the video short. The SEC has a Holding Foreign Companies Accountable Act with which they now have the method to identify Chinese companies. This means that the identified companies' auditors, like PwC, for example, have to share the identified company's audit papers within a time period of 3 years. If they do not, the identified company will be delisted after the 3 years. The problem is that by Chinese law, the auditors are not allowed to share those audits with the SEC. So in conclusion, the Chinese regulators or the Chinese government has to sit down with the SEC to find a solution. This has nothing to do with the companies itself, like Neo for example. It only depends on the Chinese authorities, which logically spikes the delisting fears about Chinese firms listed in foreign stock exchanges, especially the NYSE. To summarize, Bloomberg spiked delisting fears for Chinese firms, but the CSRC denies the article. Didi listing has nothing to do with a possible delisting of other Chinese companies. Omicron variant spikes market uncertainty. SEC threatens with delisting of Chinese companies if not compliant. All those news combined ended in an uncertain and fearful investor sentiment, which we definitely have seen last week. Now we have to be patient and wait until further information gets leaked about the overall situation and the China-US relation, mainly the SEC and the Chinese authorities, to agree on the audit paper transparency. As I said, I am being honest and tell you that I am no professional, and have to do my own research, so you should do too. I hope I pretty much succeeded at summarizing the events of the last week. If anything should be wrong, or I should have forgotten an important point, please let me know in the comments. I think in times like these with a lot of misinformation circling around, it is important to keep the overview of what to be real and what isn't. I cannot and will not give an outlook on the NEO stock, because this is not what I do, and at the moment it is far too uncertain given the situation. I still hope you enjoyed today's video, and I would appreciate if you would leave a like or even a sub, and I hope you stay calm and reasonable during this rather harsh time. See you in the next video.